This is Sarah Mikesell with thecropsite.com, and today we're here. I'm here with Kel Kelly. He's an economist with Growmark, and we're at the Global Grains Conference in Chicago. And Kel, today you presented to the group and talked about China and their impact on not just the U.S. market, but the global market as well. Could you tell us a little bit about what you presented to the group?
Yes, what I discussed was the notion that China is a dominant factor on global commodity prices and especially on U.S. prices in particular. And I pointed out that contrary to the common notions, I don't think China is very much of an influence, and it boils down to mainly the fact that they don't buy our agricultural products. People look at China and how much they're growing in the world and think they must have an effect on other world economies, and the only way they can really have an effect is by providing goods or services to the rest of the world. Otherwise, they don't have a direct effect. As far as agriculture in particular, they think that since China is consuming so many agricultural commodities, they must be affecting our markets and taking products from our markets. But the fact is that China is a very large producer of agricultural commodities, and they're producing mainly what they're consuming mainly what they are producing. They do import some additional commodities to add to their consumption, but it's usually a very little amount. Most of what they consume is what they're producing. Now, there are some commodities like soybeans where they take a lot from the U.S., but most other commodities they do not buy, all of the grains virtually, they buy none of from the U.S. nor from the rest of the world. And I also discussed that commodity markets, though we see them as a global market, are really more individual local markets because each country has its own market and prices in that country are in its domestic currency. And so there's a certain amount of corn sold in each country in different currencies, and they have different prices. And I showed the evolution of price movements of these different commodities around the world, and to show that there are different markets. The point of that was to show that for China to affect our commodity markets in U.S. dollars, which are associated mostly with United States production of commodities, as that's what's sold in those exchanges mostly, China would have to actually obtain U.S. dollars, which isn't their currency, and come into our markets and buy to spend those dollars in our markets and compete with existing players and bid up the prices, or they would have to affect the supply of commodities in our local markets, for example, selling some of their production on our markets. But what's sold in our market is mainly just what we produce. So there's no sign of China buying from our market or affecting the supply of our market. In fact, I pointed out that exports in general in agricultural markets and grains in particular have been falling over the last few years, which shows that not only China, but the whole developing world, rather, which is commonly attributed as a dominant player, or those are the whole slew of players. They've not been taking our commodities because our exports haven't been increasing. So we would have to be shipping more to them if they were taking our products and bidding up our prices, but they are not. Because exports have been declining, not rising. And lastly, I showed that the rest of the world is producing their own commodities, and that's what economic growth is. It's increasing the production and supply of goods and services, and the rest of the world is growing food per capita at a faster rate than the developed world, and they produce almost 3/4 of all the food in the world. So they are not taking our food, and we are not feeding the world. And our markets are mainly affected by Wall Street and the goings-on here domestically, not by foreigners.
Very good. Well, thanks so much, Kel. It's a different perspective than we've heard from others, and it's always good to add that to the mix.
Quite welcome. Glad to be here.
Thanks so much. And this is Sarah Mikesell with 5M.